Hello everybody, welcome to another update on the stock screener. Today we are going to talk about Baru Gold. So I got an email out of nowhere in my mailbox from Baru Gold. Of course, I get so many emails, but I checked it out. And the first thing that I noticed was that Baru Gold commences gold mine construction. So that was uh, a sign for me to do my due diligence and check this out. So I looked at Barry Gold. It has done nothing for years, went up a bit, and then it went down. So this is a top at 0.2, and now it's half the price at 0.1. So I think this is a good place to get in. So I looked at the news release, and it said that they will construct a heap leach and that first production is going to be in the first quarter of next year. So in 3 months from now, we will have first gold pour. This is a very, very fast timeline. Normally, you would have multi-years of construction periods, but this heap leach can probably, apparently, be built in 2 months. So I find that very interesting because I like to earn money right now and not wait years. So I dove into this and let's get to the numbers. So the market cap is at 15 million. Has a little bit of debt, but it has enough cash, 3 million cash, probably to build this heap leach. So it is fully financed and no dilution is needed until production next year. So first quarter, they will have gold pour, but of course it needs a few months, probably 6 months to ramp up to their phase one, which is 1,000 ounces per month production. So probably in June, we will see 1,000 ounces per month, which is 12,000 ounces per year next year. Okay. The AISC is probably around 1,200. So first it will be a little bit higher, and then later on, they are going to improve their process and get it down to 1,000. Okay. Also very important, insiders own 10%, Sprott owns 15%. So there's a huge backing of insiders on this company. Fully diluted and share counts are almost the same. So not a lot of dilution will come. It's a very cheap market cap. So heap leach of 80%, it's in Indonesia and ready to produce. So first off, we are doing our calculation. So with AIC of 1,200 and 12,000 production and EBITDA multiple of 5, we get our valuation of 25 million. So if we just go into production, this company can easily go up 50% based on my calculations here. And it's a done deal because they are going into production. They know the AIC, they are profitable, and they estimate that the cash flow will be around 6 million Okay, so here you can see the cash flow is $6 million, and that also corresponds with my valuation. 6 times 5 is 30 million. Okay, so there's no downside risk, only upside. So they are going to use startup bits for this, and the resource is around 200,000 ounces of gold. So that's enough for our 12,000 production per year, more than 10-year mine life, no problems. Okay, so that's our base case, and they're going to do that from these two pits here, Binebase and Bawone, and yeah, that's our base case. Now, where is the upside here? So first off, the upside is found in the resources. So the 2010 NI 43-101 said that there could be 800,000 ounces of gold. Here they are only using 200,000. So they're now actively drilling, infill drilling, and going to the 800,000 ounces. So that is the first catalyst. Increase the resource base into the measured and indicated category, because these are inferred resources. Okay, so that's our first catalyst. And with more resources, they can, of course, increase their production. By the way, this is the plant that they are building. This is the process plant, heap leach operation here, to be built in 2 months. Okay, so they are going to increase production. And what's the production estimate in 2024? It's 4 times the current production. So they can increase production by 4 times. Very important, because if you increase production by 4 times, your share price is going to go up 4 times. Okay, that's the thing to keep in mind. Okay, so they are also drilling to get a 1 million ounce resource to the measured and indicated category, 30-year license. And this is the thing that they're going to build after the heap leach. They're going to build a Merrill-Crowe plant in about 1 year time to capture silver credits. And when they do this, out of the cash flow that they get, which is 6 million, they are going to decrease the AISC from 1,200 to 1,000. That's the first catalyst. So they get the silver credits. As you see here in the resources, they have about, this is 200,000, and this is 3 million silver, which is about 30,000. So there's about 15% silver in the ground there. So they're going to get the silver byproduct credits, and this will decrease AIC. And in about 2 years, they will have 4 times production and lower costs. So I have inputted these numbers here: 48,000 and 1,000 AISC with a 5 multiple, and we get this data point: 130 million market cap goal. So we could go from 15 to 130 million. I think this is a 5-fold when we do this. Easy 5-fold in 2 years. So the only thing you need to do is wait 2 years, and you can get 5-fold on your money. Because all of this is financed. Initial production is financed, and the increase in output is also financed. Based on the cash flow that they get, Merrill-Crowe plant will be built. We get 4 times increase and lower costs. So this is a great opportunity to get into this stock. Now, they also have the Miwa project, which is another exploration property, but I don't even count this. Apparently, this project has 3 million ounces of gold, which could be 10 million ounces. If you just do a normal valuation on this, this could be worth several million, hundreds of $1,000,000, probably 100 to 200 million dollars. The problem is it had a bad history around forest moratorium, so that's why I don't put any value in this Miwa project. Only value I put is in this Indonesia heap leach project, which could 5-fold your money. So I think I'm going to start an initial position in this and see where it goes. And I'll see you in the next video.